What's up, YouTube? Welcome to the Credit Plug channel, where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. So in today's video, I'm gonna be talking about credit funding strategy, and I'm gonna be sharing with you a technique that will guarantee that you get approved for every credit card, loan, or line of credit that you apply for. But with that particular strategy that I'm gonna share with you, there are some prerequisites that you're gonna have to check the box with. So this strategy will not work with every single person because, as I'll get into details, you have to meet certain requirements in order for this strategy to be effective. Now, generally speaking, when you're going for rounds of funding, you're gonna wanna make sure that your credit is as pristine as it can be. So you're gonna wanna pay down your balances, get your utilization below 10%, ensure that there are no derogatories on your credit profile. Now, I see this a lot and it's very counterproductive. If you have late payments, derogatories, don't expect to get approved with different financial institutions, because the way they're looking at it, if you haven't resolved or responsibly repaid someone else, why would they take a risk of extending credit to you with a strong possibility that you may not be able to repay based on the information on your credit profile? So having a clean credit profile is very important. You're going to want to refrain from opening up new accounts within a 6 to 9 month period. So this is when I'm talking about gardening. When you're gardening, you're not applying for new accounts. You're letting your current accounts age. And I would say the minimum rule of thumb is 6 months. So when your youngest account is 6 months, then you will be in a decent position. Now, it's going to vary from institution to institution what they consider a brand new account, but in general, 6 months, you'll be in pretty good shape. Another thing I wanted to mention about credit scores. So credit scores, it's not like a linear relationship. As your credit score goes up, your chances of approval go up. That is true to some degree, but it's not always the case. So I see a lot of people get caught up in their Credit Karma credit scores. So for one, Credit Karma is using the Vantage scores, but Fico scores is what's used more frequently with a lot of institutions. I would say probably 99% of institutions use Fico scores. So go on My Fico and check what your credit score is. But besides from the numeric credit score, there's other data points that you want to check the box with as well. Do you have at least 10 primary accounts where you're the primary account holder? And I know right now authorized users are very popular. People like to see that boost in their credit score on Credit Karma and think that they're ready to start applying and getting approved for everywhere they go. But one thing you have to remember is an authorized user account is not your account. So it doesn't really convey what your credit worthiness. Now, authorized users were very popular even several years ago because you can expect to get comparable approvals when you add authorized users. But financial institutions and the credit bureaus are adjusting. So one thing about algorithms, they don't stay the same. They change, they evolve. So as a lot of people are now trying to inflate their credit profile to make themselves appear more credit worthy, the banks and the financial institutions are adjusting to that. So they're discounting certain information. So at the end of the day, you don't want to rely on authorized users because, for one, it's not your account. You can't ensure that that is actually going to report on your credit profile. And then, in my opinion, it's just best to organically build your credit. I know it's not popular because a lot of people want a shortcut to get to funding, but when you're patient and you actually have your own primaries, it holds so much more weight. You don't want to use old methods for a new age situation, right? Old solutions for new problems. It's just not going to work. So let's talk about FICO 10 real quick. So FICO 10 is the latest FICO scoring model that comes out now. FICO 10 is designed to give financial institutions a more precise assessment of your credit risk. So they're going to be looking a little bit deeper. And one of the changes is that FICO 10 is looking at trended data. So they're going to be looking more closely at your credit profile over the last 24 months. And a couple things that are going to affect people. So for people who already have excellent credit habits, then their credit scores are going to go higher. For those who don't, it's going to go lower. And I'll give you a couple examples. So a couple things they're going to be looking at is your debt, right? So are you carrying balances over a certain period of time? And what they're really going to be looking at is, okay, are your balances increasing or are they decreasing? So they're differentiating different credit profiles based on if you're a transactor versus if you're a revolver. So a transactor is they have a credit card balance and they pay it off in full, or, pay it down very low. A revolver is someone or a credit customer who just maintains a balance over a certain period of time and don't really pay down that balance. So if you're carrying in balances a lot going forward, the FICO 10 model is definitely going to hurt you. If you have any late payments within the last 24 months, then it's really going to negatively affect you when it comes to FICO 10. Just understand that the methods are changing and you have to adjust accordingly. So let's get into this strategy that I was talking about in terms of how to be able to ensure that you automatically get approved for a credit account. There are certain prerequisites. The first prerequisite, you're going to have a good credit profile. Now, you're going to need your own primary accounts. You're going to need to have utilization below 10%. I would say at least a minimum average age of at least 2 years, the more the better. Absolutely no derogatories on your credit profile. Now, if you don't hit the bar on any of those, then this strategy may not work. So the credit component is one aspect of it, but going forward, the methods are changing, right? Institutions are going to want people and customers who have a strong cash position, meaning that you have money in your bank account, you have income coming in. So credit is one component, but the other prerequisites, you're going to need to have a good amount of cash in your bank account, whether that's personal or business. And by a decent amount of cash, in this example, I'm going to say if you have $100,000 in your bank account. So let's say you have excellent credit, you have $100,000 in the bank, and you have a banking relationship for at least 3 months. So what you want to do is show that you have money coming in. So aside from the credit, aside from the cash reserves, you're also going to want to demonstrate income, that you have consistent income coming in, and that's demonstrated through your banking activity. I talk about this a lot when it comes to fintechs. They're looking into your banking activity like Plaid. Plaid can analyze your banking activity, see how much money you're retaining in your bank account month over month. So what you're really going to want to do is make sure you're retaining more money that goes into your bank versus what's coming out on a month-to-month basis. So if you can demonstrate that, that's going to bode well for you. What you're going to do next, you're going to go into the branch at whatever financial institution that you've been with, a minimum of 3 to 6 months. You have at least $100,000 in your bank account. You have excellent credit, no derogatory information, low utilization below 10%, at least 2 years average age, and no recent accounts in the last 6 months. So that's the credit criteria, 100K minimum. And number 3, so it's not just about having that 100K sit there. You actually want to show them that you have consistent income coming in on a monthly basis. So I know a lot of people might get this money from like PPP, etc., right? So a lot of people who did get that money, it might sit in their account, but you want to show that you're actually transacting, having income. It's good to have the cash, but showing that you have steady, consistent income is going to be the third component of it. So remember, credit, cash, income. So after you've made sure you have all of those 3 components, let's say you want to apply for a credit card, go into the branch. Do not apply online. Do not apply on the phone. Go into the branch and sit down with someone. You check the box in terms of, you're low risk. You also have money. So the thing about the cash position, cash attracts more cash. When you have $100,000 or more to a financial institution, you're much less of a risk. And in addition, that money that's sitting in their account at their bank, your account at that bank rather, they're able to lend that out at 10x or more. So that 100K or whatever you have, that's going to enable that financial institution to be able to lend it out. So they want your money. You're in a power position. The bank now needs you. They need your money. Now, this is going to vary depending on the institution. So this probably is going to be less effective at like the large banks and stuff like that because they have trillions of dollars. But let's say at a mid-sized bank or even a credit union is going to be much more effective because they want customers who have money because it enables them to increase their lending capacity, therefore make more money and be able to provide more within their financial institution. So once you put yourself in that power seat, then it's much easier to negotiate. So when you go in person, you have excellent credit, you have 6 figures plus in their bank account, and you apply for a credit card, right? And the reason why you want to do this in person is because you want to sit across from that person, that branch manager, whoever. It's going to be hard for them to deny you in person when you have all of those criteria. Because if an institution denies you for a credit card when you have excellent credit and you have six figures in their bank, it's just hard for them to do. Can you imagine sitting across from a branch manager, and I have 200,000 plus in my bank account, and I apply for a credit card and they say no? So it's really about putting yourself in a power position, as opposed to, okay, I just added a bunch of authorized users on my credit profile. Now let me go ask and beg the bank to approve me for a loan. You're not in a power position, because from the bank's perspective, you just present risk. But when you have money with an institution, you're an asset to that institution. So it's going to be easier for them to provide more loans and lines of credit. So essentially what you can do, if you fit that criteria, you can shop your money around. I call it the show money strategy. You show them that you have a decent amount of cash reserves, you're low risk as evidenced through your credit, and you have income coming in. Then you put yourself in a power position. And so it's going to be a lot more effective and easier to get loans and lines of credit. And you can do that indefinitely. You can go from institution and kind of play that strategy until you get, credit card, line of credit, whatever. And then you could take your money and go somewhere else. So that's one of the effective strategies that I learned actually from a multimillionaire who basically does the exact same thing. They make a large deposit, wait a couple months, and then they get credit. As soon as they get the credit they need, they take their money out, or they leave a little bit there, but they take the majority, put it somewhere else, and kind of repeat the strategy. And this is much more effective than just only relying on your credit score. Even with a great credit score, yeah, you can get approved, but with the relationship banking strategy and checking the box with being a low profile, having cash reserves, and having cash flow, is just going to put you in a power seat. And so that's all I really wanted to share in this video. If anyone has any questions and comments, let me know in the comment section down below. And until next time, y'all take it easy, and we'll talk to you soon. Peace.